We've all been told the standard advice: invest wisely and work hard. But is there more to the story? Today, we're diving into a truth about gold and wealth that often gets overlooked. It's not a trick, but a fundamental principle that could shift your perspective on building financial security. Stick around, and you might be surprised by what you learn. When it comes to investing, metals shine in every investor's eyes, right? Gold and silver have been like portfolio owners for some people. But most of us decide where to invest based on looking at the investing trends created by the ultra-wealthy people. So, let's break it to you: the wealthiest people are preparing for something quite special with their fortunes, and it involves a significant quantity of gold. A story on Yahoo reveals the exact amount of money these wealthy people are putting in gold. Outside, it feels like a crazy market. You would have come across those commercials and sales presentations that try to convince you to buy gold. Nowadays, podcasts and online interviews also have the same effect. Let's face it, these stunts are simply the nightmares. But these ads frequently depict everyone wealthy on the earth as stockpiling gold bars. On the contrary to popular belief, not all of them have an obsession with gold. However, an article on Yahoo has a lot to say about rich people's investing patterns. In a post headlined "How much are the ultra-wealthy investing in gold?" told that among the wealthy elite, there is not exactly a gold rush going on. Granted, some people are highly interested in it, but not everyone is lining up to buy tons of the shiny metal. And you will be amazed to know that governments and central banks are also joining the trend and hoarding gold like there is no tomorrow. Central banks may have been heavily purchasing gold, but the ultra-wealthy people are only tiptoeing into the golden waters rather than swimming in them like Scrooge McDuck. According to research conducted by real estate specialist Knight Frank, those who possess over $30 million in wealth often retain approximately 2% of their fortune in gold. That is less than what they invest in other things, but it is more than what they invest in cryptocurrencies. These people spend more money on luxury automobiles, exquisite wine, and artwork than on gold. It appears as though they are accumulating experiences in addition to increasing their assets. Gold is therefore not usually their first choice when it comes to investing their fortunes, even though it is on their radar. Curious to know about the stuff these ultra-wealthy people invest in? Have you heard of a Rolex? Well, who hasn't? Yes, those elegant, high-end timepieces. The market for Rolex is beginning to cool. Maybe time holds no value for them now. These watches are becoming less shiny as a result of declining prices. But it gets even more intriguing, so hang on to your hat. The market for luxury cars suffered back in December 2018, when the effects of the recession were still being felt. Sales of expensive vehicles, such as Lamborghinis and Alfa Romeos, fell precipitously as prominent bankers tightened their belts in the wake of the credit crisis. High-end auto dealerships were also feeling the crunch. H.R. Owen, a significant participant in the luxury car market, was under pressure at all of its London-based locations. Moreover, an upscale London car shop, well known for its Bugattis, suggested that a difficult few months would cause them to go into the red for the remainder of the year. Are you familiar with the term art market crash? It's more than just a historical account, though. As recently as July of last year, there were rumors that the art market was on the verge of experiencing yet another slump. Auction sales were faltering, and surprisingly, a reputable gallery was forced to file for administration. In the world of luxury products, it's like being on a roller coaster, isn't it? A feeling of familiarity permeated the whispers of doubt. There are some unsettling parallels between the current status of the art market and what happened in 2008. It followed the path of the art market with great care, charting its ascent in the spring of 2008 and its subsequent collapse that fall. You can draw similarities between then and now. However, this situation is about more than just sales numbers. It's not the delicate between value and perception, where confidence rises and falls with the tides. Similar to other luxury markets, the art market is subject to fluctuations in the economy. The tiniest earthquake can cause shockwaves that travel across auction houses and galleries equally, since it's such a delicate environment. How the circles complete and similar things happen after years of impacting economic attitudes is very intriguing. In the same way that art is a mirror of societal changes, the fluctuations in its market reflect changes in the financial system. The art market does well when investors are positive, but in uncertain times it becomes a test of resilience. However, there is a chance of opportunity amid the uncertainties. A good eye and a steady hand can make the most of downturns as an opportunity to purchase desired items at lower prices. It serves as a reminder that intelligent navigation and calculated decision-making are still appropriate in the world of luxury. And this is the quality that makes an investor different and helps one bag benefit. Coming back to 2008 market struggles, it was not simply the stock market. Art and high-end goods like Lamborghinis and Bugattis also suffered. That's so because wealthy people, who frequently have a lot of debt, feel the squeeze too when credit becomes tight and equities begin to decline. Now, talking of the present, we can recognize certain well-known warning indicators. Consider Lisa Schiff, a well-known art advisor in New York. She had to close her business recently, and she left behind a considerable debt of at least $5 million. Not only does she sense the heat, though, it feels like the same old déjà vu from 2008. Therefore, it's important to keep a watch on these passion investments, in addition to gold, even though everyone is talking about how it's included in the portfolios of the extremely rich. History does, after all, seem to repeat itself. The world was rocked by the global financial crisis in 2008, and luxury markets were not immune. The impact the stock market crisis had on other assets was just as important as the crash itself. Demand for high-end vehicles, such as Lamborghinis and Bugattis, decreased as people's budgets became smaller. Similarly, the art industry suffered even more. This also indicates that nobody is immune to financial downturns, not even the wealthiest people. The wealthy, who frequently use leverage to finance their investments, can find themselves in risky situations when credit becomes scarce and the economy weakens. The demise of upscale companies and the growth of debt are unmistakable signs that something is wrong in the luxury sector. There is havoc in this sector. New technology is coming in. Everyone is experimenting. Things are pretty uncertain out there. No one knows what this industry holds in the future, though the future looks bright. So maybe the investors are waiting for that brightness to appear first. Have you heard about the esteemed blue-chip Mayfair Gallery is owned by Simon Lee? Well, who doesn't? The news is that the administration has taken over. And if you participate in art auctions, you may have observed a sharp decline in sales. The Christie's Modern and Contemporary auction, held in June of last year, saw a staggering 66% decrease in sales over the prior year. And the sad part is there are many such examples. And not just any art is having difficulties. Large-name artists like Gerhard Richter and Jean-Michel Basquiat have unsold works that create a bleak image for the art market. Oh, and let's not even talk about NFTs. That market has collapsed. Now, let's go back a little wherein we question to what extent the ultra-wealthy invested in gold. Here is the thing. Gold continues to hold its value, while the value of art, Lambos, and Rolexes is falling. So in simple words, ignore what the ultra-wealthy people are doing. Concentrate on your priorities. Don't you think putting your wealth in gold or silver automatically feels right? And if you are smart enough, you will be putting money into gold, which holds its value. Moreover, doesn't it feel safe and familiar to invest in metals? It is the traditional way, so it works too. Above everything, even if the market drops, it is your long-term investment. You will eventually get some benefits out of it. Hope you got an insight on the idea of investing in gold, and we believe you have clear sight now. If we are assuming right or now, tell us in the comments section below. If you enjoyed watching the video, don't forget to like, share, and subscribe to our channel for more such content.